All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. 20,000. Music's coming to an end, I think. Crescendo. Nah, we'll just end it. All right. So what's going on? You looking good? Yeah, you're looking good. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. What's up, eh? Hey, my name is Wayne. I'm a currency trader like you. I started with technical analysis. Actually, I started with quantitative analysis. And then I worked my way to technical analysis. And then when studying for the Series 3 examination, back when the dinosaurs were still roaming the streets, I was taught that there's something called fundamentals. There's a reason why the markets move one way or the other. And I'm like, really? So anyway, so that Series 3 process brought in fundamentals. And then later on, not just fundamentals of the iron ore or coal or wheat markets, or oil or energy markets. But some economies produce some things, some economies consume other things. And it turns out Forex is the flow of capital around the world. So the very last thing I added to my repertoire was macroeconomics. Man, it was easy to learn. It only cost a Lamborghini and 5 years at Harvard. And then boom, I got my macroeconomics. So anywho, there's a lot that goes into this thing we call Forex, and I am here to share every single day. For about 20 years, I've been sharing every single day. Sharing and caring. Right? If I had two pit bulls, that's what their names would be. This is Sharon, and this is Karen. Sharon and Karen. And they will kill you. So anywho, so let me know how I can help. And we'll put together some, I'll share some trade planning techniques. But ultimately, I'm not here to put you into a trade. I'm not here to get you all excited about trading. Rah, 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 let's get rich quick. Trade, 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 scalp, scalp, scalp. Look at me, I made 22 pips. Okay, so instead I'll give you a dose of reality, a sober reality sometimes. But it's up to you to fulfill your destiny or chase your dreams. Chasing dreams is what Marcus Aurelius thought was stupid. Okay. He was much more interested in reality and strategy to make reality, bend to his will. Yeah. So, anywho, we'll do some trade planning. We'll look at gold, oil, Bitcoin, or really whatever you want. We'll look at the stock market. Whatever you want. Cool. So just let me know how it can help. Technical analysis, fundamental analysis, trader psychology. Yep. Long-term, short-term. Yep. We can cover that, but I need you to ask. Now, I hope these free live streams are helpful. It's not I can't possibly, I can't possibly use just the free live streams to make you successful. It's more like push you in the right direction, show you some truth and some reality, but more is needed, and there are more resources available. I don't hold back so that you buy my book, for example, but there's just more that needs to be covered that I could possibly cover in a free YouTube live stream. So other resources like my book are available. The link is in the description below. I don't care if you buy the book or not. It's not even my book. I only wrote it. The book belongs to Wiley Publishing. So people asked me, they said, Wayne, can you write a book on trading Forex? And I said, yep. So I wrote a book called Strategic and Tactical Forex Trading. Boom. So you can buy it. It might be helpful. Maybe reading is your modality. I will be writing 3 more books is in the plan. So it'd be nice if you left a review to show me that you even care. The second thing is I can help you through FX Bootcamp. There's 88 hours of training for $88. That's a good start, my friend. That's a lot of training. And it's not fluff stuff. It's not like there's filler material. Some of it is like college level, minus the calculus, courses. Like you will come out not just knowing a little bit more about trading, but you'll actually come out like knowledgeable about things like economics. Like the macroeconomics course is probably for second year econ students. Like it almost follows a curriculum. Like it's legit. So you might want to take the monetary policy course first and then take the macroeconomics course, and you will like have a legitimate education. I'm telling you, it's legit. It's not just some kid teaching you how to like skippity scalpity and make some pips and get rich. Like it's a real, true education. And Harvard was more than $88 a year. Okay. It may not be Harvard, but I learned some of it there. So you get a sprinkling. And then lastly, look, you're going to need a foreign exchange broker, ideally one that doesn't trade against you, one that is fast, one that is affordable, but one that has exhibited in the real world ethics. And that I've seen at tradersway.com. And you need a broker. I recommend them. I've been trading Forex for more than 20 years. I've only used a handful of brokers because I don't jump around looking for the cheapest. What I have seen is the cheapest are usually liars. And they promise you one thing and then they stab you in the back, and you end up paying a lot more through things like slippage in the algorithm and all that kind of stuff. Like, no joke, I won't mention names, but there was a very large broker in the United States that got audited by the National Futures Association, and the NFA found that that broker had in their algorithm built-in slippage, which means they promised you, let's say, 1 pip on the euro dollar, but every time you traded the euro dollar, it would slip a half a pip and you wouldn't see it. So you would pay a half a pip more than what they promised you. And then when they exited the trade, they'd slip you again a half a pip and you wouldn't even noticed. But the problem that the NFA found is like, hey, broker, you're telling your clients the euro dollar is 1 pip, but you end up charging them 2 pips. Like you're doubling your fees, and you're doing it in the algorithm in a way to hide it from your customers. In a way, you're stealing. And as the National Futures Association, we think that may not be in the best interest of the client. So you're going to have to at least tell them that that's what you're doing. And they did. They sent out an email. So anyways, like, I have not seen that at Traders Way. And what I have seen is when the market is in duress, Traders Way behaves in a transparent, ethical way, as they promised. And I'm like, snap. That's good. So that's why I recommend tradersway.com. Jay Foster said, I recently bought the book. Oh, sweet. Please leave a review. Please. 33 pages in, had me convinced to join FX Bootcamp. That's funny. Cool. Right on. Went ahead and joined the swing trading group. Well, worth every penny. Right on. Sweet. That's so cool, man. Yeah. My guess then, if that's how you responded, is the brutal honesty. And that's just, I've always been that way, and it startles people sometimes. But for others, you're probably somewhat the same, right? The brutal honesty. I remember my first time I spoke at a conference. It was the very, very first Forex Trading Expo. I was a keynote speaker, or one of the major speakers. Like there was like 6 speakers that they promoted on the website and all their other ads. And I was one of those people, so I guess that's a keynote, I guess. But I want to get some exposure for FX Bootcamp. That was the first time publicly, really, that I went out and promoted FX Bootcamp. But so I did a presentation called Strategic and Tactical Forex Trading. Yeah, it actually led to the book. But nonetheless, in the conference bag, because this was a real conference where real people showed up to a real place in Vegas at one of the hotels, at one of the big casinos. And I decided I would put a DVD in the conference bag so every single person got this DVD. So you had to record all the things, and then you had to have them burned and labels put on and jewel cases made, and then it had to be shipped there, and then I had to put them in the bag. So it cost me many, 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 many thousands of dollars, right? But here's what I'm getting to, the brutal honesty part. So some people, I imagine, got the DVD, went home, put it in their DVD player. And why DVD, you ask? Because you couldn't stream videos back then. Okay? So anyways, so people put it in, and it was me showing people how to do, I think I did about 20 different trades, showing a technique and then me in the live market. And the very, very, very first trade I made on that DVD, I took a loss. And I'm sure that just shocked people. Oh, lost money on that one. But here's the technique I tried to do, and maybe here's why it might have failed, or here's where I kind of missed it, or this is a great example of having proper risk management. But think of that. I spent thousands of dollars showing thousands of people how I trade, and the very first example was me losing money. I like that kind of integrity. So anyway, so Jay, because I remember, I think I started out the book something like this. I said, when I first started trading Forex, I sucked. But after, blood, sweat, and tears for years, I started to suck less and less. And so there's that brutal honesty. And that's how the Wayne do. Okay, we got enough votes. Thank you, everybody, for participating in the poll. Most of you guys are risk off today. Sweet. Some are risk on. Some are on the crosspairs. So really it's 50-50 risk off or not risk off. That's interesting. So I'm risk off, but I have been for a couple of weeks now. And you remember, I had to wait months, really about 2 months. Now I expected the December rally. Well, we expected the late October, November rally and half of December rally. So all of that I expected. Now, the end of December could rally, could not rally. Doesn't really, I'm sort of benign on that. And usually I'm out of the market anyway, so I don't really care. And then what I quote unquote got wrong is I expected downward pressure on the economy in January, and we just didn't really get it. And so normally I'm a dollar bull in January, and we just did not get that. We just didn't get it. So in that case, I had to wait about 4 weeks. Remember, I run a day trading group. So every single day I had to show the day trading group how I almost got into trade, how I almost pulled the trigger, how it almost looked really good. Meanwhile, every single day I'm squirming around a little bit, and I'm patient, and you need to be patient. You need to be disciplined, right? Squirming. And then February hit, boom, game on. Dollar strong. Boom. Let's go, Bubba. Okay? And I think that's good trading too. Being wrong, let's say, well, it's not that I was wrong, it just wasn't the right time. So waiting. And so now, since this double top, this triple top, in fact, on Kiwi dollar, I'm a dollar bull. Yep. But you have to understand, I had to wait probably 5 weeks for that opportunity. Okay. Great. Okay, cool. So anyways, so my point on that is I was a bear yesterday. I was a bear the day before. I was a bear, and I'll be a bear tomorrow. Okay. So what we're looking at here, we already have it marked out. Okay. When we had this big move down, we already had this marked out. So we had the up. Okay. Look at this. Break, pull back, and hopefully continuation. We got a 4-hour kicker on the Stokes, which means price is trying to make lower lows, but it's not trying to make higher highs. Game on. What do you think? Smell like a plan? Okay. What do you think, huh? What about, let's pick a different one. I believe I did this in the day trading group last night, or maybe on Sunday. I know it was a holiday, but I decided to work anyways, and most day traders were there. Check this out. I drew this triangle. Can you see it? What do you think? Does that look down or does that look up? Okay, so that's going all right. Is it pretty clear, this setup? Let me get rid of the fib here. I don't know, is it clear or is it ambiguous? Well, we got to make a lower low. But if we do make a lower low, we're going to sustain this down for a while. Right, Gracie? Can you see we're on the precipice of greatness? Yeah. That's risk off, Bubba. Left frog. Okay, what else going on here? I have a target of 35.5. We're at 34.80 now. Notice that we started that plan at 32, 33. We're now at almost 35, on our way to 35.5. Up, down, up. You're like, but Wayne, it didn't work exactly the way you wrote it. Well, notice that we're in a range. And the way I teach ranges is you buy at the bottom. And ideally, like the only risk you can take is buy, if you're a bull, buy at the bottom and hold for the break. Or you buy and you exit at the top. And you can see the first one, buy and exit at the top, was great. The second one is you buy and then let it break. Now, can you tell that this one's going to break and this one not? No. No, you can't. Okay, that would have to do with maybe some seasonality or some fundamental change in the market, some reason the US dollar is strong or some reason the Canadian dollar is weak. And that's very difficult to know, but okay, you can see what I was guessing here is maybe we have a step up. And look what actually happened. Yeah, we might have the step up. I was just a week early. Well, you never really know. You really, honestly, you don't really know, but seasonality certainly helps. Okay. Okay, euro dollar, what do you stink? Can you figure out what the trade plan is? Again, this is from our day trading group. Why don't you join the day trading group, by the way? You should join. You get the swing trading group included. You get the stop, look, and correct session included. That's a lot of help. Plus all the training videos. That's a lot of help. But anyways, right? Yeah, so. Yeah, and our thought process on this last night was, I'm already a bear and we had this big move up. Should I panic? Should I get out? The SLC starts at 2. The day trade starts at 4 for the at the New York close. Because what we're doing is we're setting up the next day's trading. So, that is what we had set up. I mean, I didn't just add that. I just dragged it across, but it was already there. So anywho, I'd like for us to ride the 21.55 down. I'd want to stay below the 4-hour 21 and have some resumption down. Now, if we break back up here, then we're running into consolidation. And that kind of sucks for everybody. Nobody wants consolidation. Some surprising news out of the UK today. So you got this big, you got this big change in direction, huh? Holy smokes. So, that makes it really difficult. Remember, the Bank of England already doesn't know what it wants to do. And so when you get really conflicting information, it makes it, I think, worse for the Bank of England and Bailey's team. Because like the Fed's going to raise interest rates higher, the ECB is going to raise interest rates higher, and the UK is a mixed bag at best. So now what? Yeah, things are really bad in the UK, but things are not as bad as in the UK. And so what do? Okay, they have a slowing economy and 10% inflation. I would argue that's what happens when you move closer and closer to socialism. And that seems to be the wave over the last 10 years. But that's not for me to say, so I won't say it. But somebody could say it. Huh? How long has Spain had higher inflation and higher levels of unemployment than Germany? Well, forever. What's the difference? Social and economic choices. Felipe, I don't even know if you're joking or not, but I'm not saying they are socialists, but moving closer. So when you make that choice, there is a consequence to the choice. And it may not be a bad consequence or a good consequence. There's just like if you turn this spigot, if you turn it so you close the valve, you get less water. Is that good or bad? Well, it's neither. It's just physics. Well, if you turn it the other way, you get more water. Is that good or is that bad? Well, it depends if you're thirsty or if you're trying to keep your shoes dry. Is it good or is it bad? Well, it depends. But the thing is, it's only physics. You open the valve, more water comes out. Same thing with economics and your economic and political choices, because the political choices lead to economic choices, because you're trying to figure out how to deal with scarcity and distribute excess. Okay, so there's choices, and you decide, okay, we're going to use this philosophy. We're going to close the spigot. Great. Economic choice. You're going to have higher inflation, and you're going to have higher levels of unemployment. But there's other positive things, like more people that have less are better off, maybe, or have more social support or something. but that's that, right? So anyways, okay, I just want you to think of it as it's not physics, of course. It's just simply economic choices that particular society made. So if the UK moves closer and closer towards a socialist view of how to manage scarcity and how to distribute resources around its society and its economy, then the consequence will be higher unemployment and higher inflation. So if someone's scratching their head like, how could we have high unemployment and high inflation? Well, maybe you made a little bit more socialist decisions. And that's a consequence of those decisions. And, like this goes back a long time. You might have to think of like Margaret Thatcher and von Hayek, and what was going on back, when was that? The 70s and 80s in the UK. Lots of unions and such. That was a big deal. Unions going on strike. He's down on his luck. It's tough. Right? You're like, yeah, the UK in the 70s. Unions going on strike. Well, obviously a little bit more of a tint towards socialism. And what were the economic conditions back then? What were the employment and inflation levels? And you're like, oh my God, there was high unemployment and high inflation. Uh-huh. Okay. So anyways, and so you'd have to say who was right, Keynes or Hayek? Well, they're both right. So which one do you choose? And then the one you choose, you should quit bitching about. So if you choose von Hayek and you have a stable economy, but with higher levels of unemployment and higher levels of inflation, well, that's a consequence of the choice you made. Quit bitching about it. That's just it. It just is. Or if you go Keynes and you're like, yeah, well, you have up and down business cycles, and at some period, some people make a lot of money, but there's income disparity and booms and busts to the economy. But periods of prosperity, well, then quit bitching about it. Those are the choices you made. That's what's going to happen if you make those choices. Love it or leave it, baby. So, anywho, dollar strength here, pound strength here. So this is a great exercise in relative strength. Looks like, let me move this to a 4 hour. Looks like dollar strength, looks like dollar strength, looks like dollar strength, looks like dollar strength, looks like pound strength. Oh my God, so if you love the dollar, you should really love the pound. Great. Okay? Love it, baby, love it. Let's take a look at the stock markets, huh? Okay, I've been showing you guys the ASX for quite some time. And it's still heading down in a blazing glory. Okay. And back down, we've spent, 12 to 6, I guess about 12 hours in this zone, right on the buyer zone. It's not that this will go up, but if there are bulls, now they need to get ready. If there are not bulls, for those that said they were bullish today, which would make you more interested in buying Bitcoin than buying US dollar, then you would say, well, in the next 2 or 3 or 4 days, you expect to see the Australian stock market to start going up. Either here or here. So you're like, by the time, so even though it's only Tuesday, you're already thinking about Monday. And if that's true, you're on your way to Forex trading greatness. Again, let me say it. It's Tuesday. If you're already thinking about Monday, what you're going to be doing next week, then congratulations, you're moving on to the next round. Okay, S&P What do you think? We just hit my target from 2 weeks ago. What would Kanye West say? Oh, God. Yeah. Oh! Lovely to your mom. Thank God I'm hedged. Partially. Cool. Nice. Great. Holy smokes, huh? Oh, Milos, I see your comment there. Well, you know the other thing about the Germans over the last 20 years, in their response to the 2008 financial crisis, they decided to spend less money. I mean, the German government and central bank, they decided to spend less money and jack up taxes. And they thought this would help the economy. And that is not what Keynes said. John Maynard Keynes. They did the opposite of what capitalist economics would tell you to do. Because when the government spends money or spends less money when the economy is already crashing, now there's even less money in the economy. So now nobody's spending. Consumers are not spending, businesses are not spending, and now the government's not spending. All of that is negative GDP. I mean, literally, that's the math for calculating GDP. So there's less C, less I, and less G. Negative GDP. And then on top of that, they raise taxes, which then lowers consumption and lowers investment. Again, more. And it's like, it's the way to kill the economy when things are good. But when things are bad, I thought it was really horrible choices. And then the Eurozone went into real serious trouble. Think of the pigs collapsing and all that kind of stuff, right? Portugal, Italy, Ireland, Greece, they were in very, 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 very serious trouble. France and Germany were collapsing as well. And the Dutch had to bail everybody out. Thank you, Holland. Quite something. And then at the same time, the Americans did the opposite. And America very quickly recovered relative to what Europe did. So Europe just sank for a decade, and the United States had a rough 18 months, but recovered very quickly. And then finally, after a decade of pain, they're like, well, maybe what the Americans did were better. And they kind of reversed course, but it took a long time. But their answer to recession was less spending and jacking up taxes. And you're like, well, Keynes would laugh at that. Now, what Americans get wrong and where Keynes would disagree with the Americans, because Keynes said, look, if the economy goes into recession, the government should increase spending. So is that what the Americans did? Yes. Great. Here's the problem. The U.S. economy recovered, and what did the Americans do then? Well, Keynes would say, reduce your spending, raise taxes, and get the money back that you gave the economy when things were good. Or when things were bad. You pump money into the economy. And now that things are good again, raise taxes and pay down that money you spent. Well, of course, the Americans just spend even more. Americans spend a lot when things are bad, and they spend even more when things are good. Okay? So, I live in a pretty wealthy part of America, and I get messages from the local schools. They're like, dear parents, please send school supplies. We need calculators. We need paper towel rolls. We need pencils and all this kind of stuff. And like, just if you could donate that to the class, that would be great. I'm like, what? I'm paying taxes. How come my local school in a rich part of America has to beg parents after paying taxes to buy a bunch of calculators and paper towel and pencil sharpeners and stuff? Like, what the hell is all of that about? Oh, well, the schools are underfunded. But we just gave another $400 billion to the Ukraine. Why can't we just give $1 billion to the schools and send it $399, right? Yeah, made us here. Maybe. But whatever. No, that's the teacher, not the school. Literally the teacher. Help me out. The school doesn't have enough stuff, and usually the teacher's pulling it out of her salary, right? But she's like, we used to have 8 calculators. Now they're all gone. Okay? Help a sister out, right? So anyway, so it's just funny. But like, come on, just send $399 billion to the Ukraine. Put $1 billion into the schools. Come on now. Paper towel, huh? Anywho, stock market coming down, and well, you know, I'm losing on my cash position, but I'm making money on my hedge position, and I suppose that's what you're supposed to do. Good for me. Good, great, fine. Let's do gold, oil, and Bitcoin. Okay, so I'm a short-term bear, meaning over the next couple months, likely I will continue to be a bear on oil, and you can kind of get the summary of what I'm thinking. That's supposed to be an arrow. Yeah, Lucas. Lucas is the problem with sending money to the schools is it goes to administration. Yeah, you know, and I'll never forget because, you know, I'm at the end of like my parental nursing cycle. My kids are going to be off to college soon. So I've been through that whole process now, which is mind-boggling to me. But two shakes of a lamb's tail ago, I was at a what we used to call Meet the Creature night when I was a kid. You know, it's when your parents come to your school and meet your teacher, right? And in this case, they're now like conferences and like. So anyway, so like I think my kid was at the time maybe in 2nd grade, right? 2nd grade. This is where like in school they play with they make paper mache projects and your kid sticks glue in their mouth and you're like, right? And so anyway, so I go to this meeting and I'm like, oh, it's Meet the Creature night. Oh, great. I want to go. And you get there and it's like the vice principal of the entire school, the teacher, and the psychologist for the school. And I'm like, oh my God, right? And you sit down in this conference room and it's very serious. And they're like, well, we got this book and it's like this huge book. And like, we've done psychological analysis on all these different things on how your kid is. And they got pages and tests and numbers. And I'm like, my God, you're teaching them how to tie their shoelaces. Why do we have a PhD in psychology and this other administrator also with a PhD? And then my 2nd grade teacher has got a master's degree. And I'm like, you're like, run, Jane, run. Right? Like you're teaching them their alphabet. And we have people with PhDs and psychoanalysis for our kids who still take take naps or whatever. And I was just blown away. I'm like, what a inefficiency is this? Huh? Like, oh my God, like, like for second grade, we're not sending people to the moon. Like, I'm telling you, it was like a SpaceX meeting of like how we were going to like work on the improving the, the self-flying boosters landing and whatever. So I just thought it was crazy. So going to like Lucas talking about it goes to the administrators, like the administrators. I'm like, uh-huh. But anywho, I don't know if it's like that in your neighborhood, but like, pfft. I'm like, oh my God, the second grade public school is like going to Harvard. It's unbelievable. And then they're like, but we don't have money for paper towels. Anywho, here we are. We're held up here still. We've known this now for days. Days. Isn't it nice to know? And now this is the next test, but if I zoom in here, okay, you can see first test, second test, rejection, and now maybe squeeze down to the next test. And if I showed you this, I would expect that you can show me a stochastics. Okay. So there's two things that would push this lower, and it would be this area here or this area here. So a bull would say, a bear on this would say it's going to break now, or there's going to be sideways to probably up for another week or so and then down. What? So I guess you would do it this way. Plan A was this, and plan B was this. If both are if you're bears. And as you can see, I'm a bear. Nice. Now, the nice thing about this was on the short run, it looks scary. So what I would show the day trading group every day, I'm like, look, should I be frightened? Should I be concerned? Should I be overly concerned? Should I be freaking out? Is this something I should be losing sleep on? And it looks like that on the short run, but on the longer term, you're like, no, maybe not. No, maybe just wait. Yeah. And it's looking okay now. It looks, so if today and tomorrow and the next day looks like this, great. And so my next worry zone would be in here around 18. And I imagine it would probably pop up and then come down. So it's a bit, because we do need to wait for the 21, right? So you'll see like ride the 5, ride the 5, ride the 5, and then we'll hit something, maybe the 200. And then the next thing would be back to the 21 and then ride the 21, ride the 21. So shallow pullbacks, bigger pullbacks. Okay. And that's what I call frequency, the frequency change, not the number of times, but the length between times, or the steepness between times. So think of truly an oscillator, steeper narrow versus shallow wider. Bitcoin, I had a really good time over the weekend, and whoa, things might be changing. Notice we actually called this out, $25,052.80 is an important number for this asset. Okay? And if it drops here, because we don't know, that's not what the charts tell you, but if it drops, okay, that makes it very toppish. And you'd be on your way back to 21,000. Now, that's not what it says it's going to do, but that is plausible. So it'd be more like, you can't make that determination now. If you're going to use technical analysis, it's going to say this is still more likely. Okay, great. You need the S&P 500 to rally. So if you don't see that in the S&P 500, that's less likely. And if you think the S&P 500 is coming down, then you're going to look for a retracement back to that zone and then some form of lower high. And that would be your future. Okay, so maybe in 2 or 3 days, maybe post PCE on Friday. Where do you stink? Great. Okay, always thinking ahead. Ooh, more red on the S&P 500. Ooh la la. Okay, so we have more downward pressure on WTI. We might have some downward pressure on Gilly Gold. Upward pressure on US dollar. Oh my God, look at that gas. Oh my God. Oh God. That puts us down to like $1.80 to $1.50. Holy crimoly. That's cray. Anyway, so maybe if gold is down and Bitcoin's down, then dollar's up. Okay. So we then look at some other assets like metals. And, maybe palladium, maybe gold. Okay. Now they're all actually moving up right now, which is kind of interesting. But remember, we're already at massive targets. Like there's nothing. I guess I got to do this somewhere else. Where do we have it? We already have this marked somewhere else. I did a big discussion with the day trading group on this one. Where did I have it? I think maybe just, do I have palladium under this? No. Huh. Well, I'll go back to metals and I'll pull it up. So I had very detailed discussions with the day trading group on this one, and I'll do it here. Confluence. Okay. So go here. And I'll move this to more like a 4 hour or 1 hour. Okay. Big, long, focused discussions on risk management. And I use this as an example. Okay. And we started the convo when we were here. And I said, let me tell you how to handle this, because I was making lots of money on this. I'm like, let me show you how to handle this. What should you do? You're making good money as a bear. It's falling fast and furious. Great. What do you do? And now that we're here, it just proves my point. Now that days have gone by, it proves my point exactly. And it makes me happy. Now, I had to give up. I had to give up for others to gain. But that's exactly what I expected to happen. That's exactly the whole point of my conversation. And we, over the course of now, 2 or 3 days, 3 or 4 days? Exactly right. So day traders that are listening, yep. And that's on a day when dollar seems to be strong. Yeah. Amazing. Cool. Okay. Now, dollar's strong, peso's even stronger. That's weird. Yep. But there's something unique going on here. And that's good. Now, if I switch this to daily, okay, this going up, okay, just shows that South Africa is a lot different than Mexico. Now, this particular price is an important price, only that, right, that we're approaching key levels. So we're at 19.5, approaching 20, and then basically 21 is ridiculous levels of resistance. But that'll probably take another month to get there. What do you think about peso on our way to 18? Well, that's the target. And remember, we've been shorting this pair for a very long time. Okay. Multiple times we held this for very long last year. I held it for 3 months most recently. And a week or two ago, I entered a new sell. And it's still making lower lows. Lovely. But it's only paying me 1,000% a year. In swap. Yeah, but besides that, it's pretty good. So I guess we did all of that. Let's quickly look at this from a different point of view. Yen weak, pound strong. Okay. Yen weak, Swissy strong. So you go to yen. And I don't even have Swissy. All right. Look at that. Ooh la la. Now, what do you do now? Well, see, that's the trick. So you're like, oh, look at this big rally. Yeah, but it's already happened. And there was surprise in the news. So surprises are very difficult to plan because they're surprises. So if you were already a bull on the pound, then it would have worked out for you. Okay. This is a swing trade. Okay. And if you read this as the bottom, then we're actually pretty close to the top anyways. But nonetheless, let's say up, down, like this. You know what? That's a lot of hindsight. That's a lot of hindsight. I think what we were doing before that news came out, I think it's fair to say, yes, there was some bullishness, but we were still basically ranging at a bottom. And look at, now we're in the middle of the bigger range. Wouldn't you agree that there's something going on here? Oh, try to get that straight. Something going on here, something going on here. And now we're what? In the middle? So, okay. So if we're in the middle now, this is where price is right now. Okay. Is this bullish or bearish? Neither. Really. Unless you think something's changed at the Bank of England and now they're going to change their policy because of that news. What about yen? Okay. So, yeah, I'd be careful. I think some traders are going to chase this. Yes, there was surprising news, but look, your choice is buy a dip, but you risk having it just kind of collapse and we go back to what we were doing, which is the Bank of England doesn't know what to do. I've been saying that for weeks. They don't know what to do next. So how do you know what to do? So whatever. So if you find that big news, a big trading opportunity, okay, fine, great, fine. I'm waiting to buy yen. I think it's early. I think we need to wait a few weeks more. Then I think I want to start buying yen. So that's that. Yeah. So we did a lot, right? Gold, oil, Bitcoin, yen pairs, dollar pairs, stock markets. Well, that just happened.